Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, investors. Today, I have the pleasure of interviewing Clay Hepler, a seven-figure land investor with over 100 completed transactions. His company buys, sells, and develops rural recreational land across the U.S. He is the founder of Landman, a leading podcast community and newsletter in the land investing world. He's also the founder of the Landman Accelerator, the top course and community on how to build a six-figure land investing business. So with that, I would like to mention also that we're going to have the opportunity to talk about how to dominate the blue ocean land of land flipping today. I just love the title. I think that's very creative. I think that avoiding over competition is huge. So for those of you who are not aware, blue ocean as opposed to a red ocean strategy where you have the sharks already in the water. So with that, I'd like to welcome you to the show, Clay. Welcome.
George, thank you so much. It's a pleasure to be here.
All right. Well, my favorite leading question is to ask, you're at a cocktail party and somebody asks, what do you do? So how do you answer that question?
I find the highest and best use for rural recreational land across the United States.
All right. That's awesome. And I think we got to go a little deeper in there. So what exactly is recreational land?
Right. So I think of about land in sort of three subtypes, right? So you have your first subtype, which is suburban urban infill lots. So think about you're driving down the street and you're in Los Angeles, and you look and you see and you say, what is that lot on the side of the street next to a gas station or McDonald's? That could be an infill lot, right? That could be commercial infill lot. And someone could build a self-storage facility there, a warehouse, a multifamily property, a housing complex, a house just with single house. That's an infill lot. And the infill lots also exist in a pre-existing community, right? You might have a pre-existing community, a developer develops a whole community, and there's still some lots that have not been developed. That's an urban and suburban infill lot. And that's a whole different world, right? That's a world that's very concentrated in major metro areas. Outside of the suburban and urban infill lots, there's rural infill lots. So think about a smaller town or a kind of community like a boating community or a community in the middle of nowhere that some developer went out and built all these infill lots, these sort of smaller quarter acre, half acre, 2 acre lots. And that's its own community. That is a rural infill lot, right? And so that's the next sort of level or classification of land. Rural recreational land is everything outside of that. So an example could be a hunting tract, a 5,000 acre hunting tract. It could be a fishing reserve. It could be farm. We put those under that umbrella because it is a catch-all term. Now, of course, there's subcategories within that, but farming or a farmlet, like think about a small 5-10 acre plot that someone wants to buy outside of a major metro area to get outside of the city, right? That is a rural recreational tract.
Right. Awesome. Yeah, very good. And one of my favorite land uses too. People think of all kinds of things you can do with land, but they usually start with your example number one is, hey, how do we develop this? And you can get the land entitled, you can build roads, you can put in utilities and all kinds of things like that. And those are all wonderful things. But yeah, a lot of people would just like to get out there hunting, fishing, ATV. A lot of people will rent your land for various reasons. So I know that from reading your Instagram, which by the way, great Insta feed, you want to give us your handle?
Yes, my handle is Clay Hepler.
Yeah, so at Clay Hepler, Instagram, great feed. And you mentioned that rural recreational land has some other advantages. So I'll just let you take it from there.
Well, I think the other advantages is sort of the very clear information asymmetry and lack of competition. Okay, so of course, in a major concentrated metro area, you're going to have a lot more population of people, right? And so there are going to be a lot more eyeballs looking at land, and that inherently breeds a higher degree of competition. And so rural recreational land, that land that, you're driving in the middle of Kansas when you're driving across the country, or you're driving to the northernmost parts of Maine or Michigan, and all this land, someone owns it, right? And so there's a lot fewer people that are vying to purchase this land, right? In terms of the competition of other buyers. And so really you can swoop in there and build a strong business, finding this underappreciated rural recreational land, and then developing it or doing whatever you'd like with it, and flipping and investing in it, and making a profit. And that's exactly what we do. So, and on the highest level, it's just really fewer competition. And that's really where the blue ocean comes from. Less people know about this. If you walk down, to your local RIA or your local real estate investors association, you hear people talking about self-storage, you hear people talking about multifamily, maybe you get someone talking about industrial, definitely some wholesalers and house flippers, maybe some developers, but how many people talk about land? And so that's the opportunity that's just so present here. And we have the opportunity to capitalize that.
Yeah, and that's huge. I know that real estate has had some major tailwinds from the fact that we've had underbuilding for a very, very long time, since the Great Recession in this country. But then look what happened. Great profits were generated, and that's the cycle we see in a capitalistic society. Profits bring people in, which then cuts your margins. Of course, that's great for the consumer. It's great for our society. But then we're always left, I would say the intelligent capitalist is then left scrambling to find what is the next great opportunity, and land is. Anyway, one thing I want to piggyback on is you mentioned about the advantages of the rural recreational land. The fact that you don't have as many people looking there, I think that's probably what's contributing to the relative lack of volatility.
Yes. What I would say is, just like multifamily real estate and just like single family homes, there are pockets of opportunity and there are pockets of poor performance. And so really the skill set of a really good land investor is someone that can find the sought after markets that are underappreciated, right? So if we look at rural recreational land, if we're buying desert squares in the middle of nowhere, we're probably going to have a different type of seller pool, right? And a different type of buyer pool. And so we want to find this really healthy tension between people that are looking for land, so maybe an hour or two outside of a major metro area, or a county that has Yosemite or Yellowstone or some local parks and some local attractions. So you have a really healthy tension between value of property, the speed of the market, and the amount of people that could potentially be wanting to purchase the property. So you got to find that balance as well when you're looking for rural recreational land.
Yeah, beautiful. So you list many things that make land valuable. I guess I'll just ask you the first question: why land? And then maybe we'll delve into some of these in detail.
Yeah. So when you say why land, are you asking specifically what made me pick it, or why is land an attractive asset class?
So you mentioned a few of these already, like the market inefficiency. It's hard to find the comps, right? You mentioned these desert squares in the middle of nowhere. Let's see, some of the others I don't know if you really mentioned yet, but the low holding costs, right? I mean, it's if you're buying it right, and you've got the appropriate reserves so you can pay the taxes, etc. But it's not like you've got to pay utilities and all these other things. You don't have like a 50% expense ratio on your hold.
That's right. So there are a couple of things that really make it attractive. Like you mentioned that there are low holding costs. So if you go in to flip a house, right, that's the easiest comparison that you can make. You're going to have taxes. You're definitely going to have utilities. You're going to have holding costs that, of course, are incurred by the debt using private financing or hard money financing. There's other costs as well. The contracting, actually flipping the property. There's the holding costs of the psychological holding costs of I have to manage all these contractors in order to make sure that they all march in order.
Yeah,
like
what I like
ants.
to call brain damage.
Right. Brain damage. And so there's this return on hassle thing that we really need to be aware of as well. So when we're evaluating an investment, right? You and I were mentioning before this call, people say, hey, Class C multifamily is just so much easier because it's less volatile. Maybe not as well. And there's other things that actually contribute to Class C multifamily or some other forms of multifamily being more difficult to hold and more difficult to profit from. Other expenses.
I can attest to that. Owner of Class C multifamily. Yes.
Right.
Definitely, you're going to have different headaches than you'll have from Class B or Class A, which, has its own headaches. You got to keep everything, in tippy top shape if you got Class A. But that's different than having the boiler, the chiller, all these other things, mechanicals going bad because you got an older building. Different vintages going to have you scrambling for different solutions, etc. Cast iron pipes going bad from somebody making tomato sauce. Yeah, all kinds of things. Every vintage has its own problems.
Yeah, and so one thing that I would add to this as well, like a couple more things, is that of course the holding costs are much lower, so you're able to pocket more of the profit that you would have been giving up to maybe the government agencies or third party vendors or your other your hard money lenders or debt lenders because of the period of time that you'd be holding the property. It's also quite recession resistant. Farmland historically has been a non-correlated asset to the stock market. And it's compounded annually anywhere between, depending on who look, what statistic you look at, anywhere between 9 to 11% compounded, on sort of uninterrupted relative to the stock market, and that's very, very attractive. You're getting uncorrelated compounding of the value of your property, and not correlated to the stock market, which like I said is pretty attractive. Another thing is there's a lot of different exit strategies, which is really, really helpful, right? So if you're stuck with a bad piece of land, you can sell it cash, of course, but you can also owner finance it. You could rent it out to a hunter or a farmer or a fisherman, or you could rent it out to someone. You could throw some gravel down and rent it out to a truck stop, right? You could subdivide it, cut it into smaller little lots. You could re-entitle it in terms of take the land of as it sits, the classification of the land, and actually change the classification. So instead of farmland, it's actually a subdivision that you can put 200 homes on. And so there's all these different types of exit strategies that we can employ as land investors that are really not prevalent in any other asset class. We can kind of sell stuff, and maybe we can owner finance something if I have a house, but I can't really develop the house very easily. I mean, that would incur significant capital costs and significant construction costs. And so we can do this all with land much more easily. And that's why it's such an attractive asset class. And of course, I mentioned the low competition. It is a blue ocean, and that's a really attractive
because you came from home flipping. You know what it's like to be in the red ocean.
Right. So I came from the house flipping world. My background is in house flipping and wholesaling. A couple of years ago, we were during one of the most competitive markets of house flipping, 2020, 2021. We were flipping about 75 houses a year, and it's competitive. I mean, you can make money in any market, to be fair, but the competition, the professionalism, the competition in the house flipping world versus the land flipping world is actually completely night or day. And so you can also scale your business much faster in the land flipping world than in the house flipping world. And the reason why you can do that is you can target a certain type of land. And that land, for example, could be net you $80,000, $100,000, $200,000 versus with houses. If you buy that type of house, it's going to be really hard because the market's a lot more efficient. And if you have a profit like that, it's probably going to be on a much higher value property, and that could incur a lot more risks. Whereas with land, the returns are much higher because of this market asymmetry. And so you can generate much higher profit per transaction returns relative to the cost of the property than if you were just flipping houses.
Good. Yeah, well, I love it. And to point out then, one of the advantages of what you're doing here, or to realize that one of the potential disadvantages you're avoiding is that you're not speculating, right? I mean, you're not just going out there buying land, waiting for some developer to buy it from you. You've got cash flowing strategies because it's all recreational land. So it's all going to go to somebody who's out there like an angler, hunter, somebody who wants to use that land for whatever they like to do.
Right. And one of the common myths related to land is an incredibly illiquid asset class. That is a true thing in markets that are illiquid, right? So, for example, if you're buying infill lots in Florida in 2007 or 2008, that's a pretty illiquid market. And so one of the core skill sets of a land investor is finding the markets that have above average sell-through rates. So the speed of sale in the market. Even in the worst conditions, you're going to be able to sell a house in Beverly Hills during the worst market conditions, right?
Somebody wants to live in Beverly Hills.
Someone wants to live in Beverly Hills. And so, of course, that's a little bit of a hyperbolic analogy here. But when we understand what markets, the markets that we're targeting, what the ideal buyer profile is for that market in terms of acreage, increment, and what people are looking for, we can have a market that's turning over the entire inventory every 6 months or every 3 months or every 12 months. And so we can really look through that, and through a series of market selection analyses, we can find the markets that we're really looking for that are illiquid, and we can create a marketing strategy to hit those markets so that we can scale our business quicker.
Yeah, beautiful. So then, speaking of scaling, let's take a step back. How do you get into the business? One of the things I like about land is the lower barrier to entry. Okay, this is not like buying an industrial property or some major commercial property where it's hard to get seller financing, and where the price of the transaction is huge. I mean, if you know what you're doing, this is something you can get into with relatively little capital.
It is. Here's what I would say. I would say that yes, but I wouldn't want to set improper expectations. What is relatively little capital? If you're over 6 months, if you want to build a 6-figure business in 12 months, in a year, I have a idea of where you need to be in terms of spending money. Now, we're recording this in June of 2024. This could change, right? I just want everyone to be aware this is not hard and fast. This is as of today. But if you want to be successful within, I would say 6 months, if you're investing in marketing and you're investing in a course and whatever you're investing in, you want to be between about $35,000 to $50,000 of cash to invest to build a profitable 6-figure business in 12 months. And so for some people, that's a little bit amount of money. For other people, that's kind of out of reach. But I would say that that's a good amount of money if you're following the normal track. Now, of course, you can do it for less. Of course, you can find it out on your own. You can cold call up people. You can do the absolute bare minimum in terms of investing in marketing, and you can figure out a way to do this. Many people have done that and bootstrapped it. But I would say if you want to have a predictable path to 6-figure success, that's sort of the range of investment that you would need over a 6-month period, right? That's not all day one, right? But that's over a 6-month period in order to build a 6-figure land flipping business in your first year.
Okay, so let's just call it out. You do have a course that's about to launch. It's the Landman Accelerator. And it's great that you got a program, because a lot of people out there that are wondering, hey, how do I get started? But don't want to just go to 100 podcasts or 1,000 YouTube videos, who really do want to see, hey, if I want to get to Y, what X input do I need to give? So let's talk a little bit deeper about your Landman Accelerator. So who specifically can you help?
Yeah, so I would say that the person that I can help is someone that has access to that amount of capital over a 6-month period of time, like that much. And in the lower end, I would encourage you maybe to say that I would need a little bit more than that. We are not in the course is designed to get you to 6 figures in profit in your first year. And so what that means is we don't just accept people that maybe are early on in their career or they don't have access to that amount of money. Because we're not in the business of just setting people up for failure. That's what I believe it takes in order to be successful. And when I say 6 figures of profit, I mean earning all that money back in the first year and then also profiting the 6 figures in your first year. So this is not like 6 figures overall gross. This is the profit over that, right?
6-figure profit, which is a big difference. Yeah, I love it.
It's a big difference. And there's no guarantees, of course, right? But that is the amount of money that it would be required to start in order to be successful. And we have an application form. We are not taking everyone. This is not a factory that we're going to print out, hey, this is how you do it, and just, follow this step-by-step course. It's really more intentional, community-based course in order to set you up to succeed, which is why that there's an application process that is required in order to even have a conversation with us about potentially working with us to start a six-figure land flipping business.
I mean, that's in contrast to what I see a lot of gurus doing out there. They'll come and it seems to me they're accepting everybody, because when I talk to people that have a coaching program, so often, unfortunately often, it's the case that someone will go for, maybe a year in a coaching program and get no deals, and then they're out and they don't really have a whole lot to show for it. So really, really appreciate that. Can't stand those gurus that are just, out there churn and burn, not too cool.
Right. And so we put so much effort in helping the person succeed. We will do this, that it doesn't make any sense for me to allocate the time, the energy, and the resources of the community, as well as the other people that are in there, if you're going to have someone that's just not set up to succeed, right? This is imagine you're in a classroom and you're trying to teach someone to learn a new math concept, right?
Yeah.
And there are people that have not done, you're trying to learn calculus, and there's people that don't understand, basic, algebra, right? You can't win, right? You can't do calculus without understanding the core
situation.
Exactly. And so we're not going to set people up to lose. And so at this point, there's it's not an extensive, just a application form that you fill out. And if we think you're the right fit, we'll get on a call with you. We'll discuss the process and discuss your goals and really see if this is the right fit. One of the other things that I really consider is that understanding your investor DNA. Your investor DNA is who you are and how you operate in the world. And that's going to set you up to succeed. The people that I see that are most successful in this business use the business as a vessel for their personal talents. They bring their personal talents to the fray. If someone is really good in sales and marketing, then they're going to be successful in this business. Not to say that someone that's a little bit more analytical can't do well. They could be more of a pinpointed data scientist, analytical person that can still be successful in this course. And in land investing in general. But I find that the people get the quickest wins are the ones that can get on the phones and really get belly to belly with sellers and get marketing out. And those are the people that really can win early on. And here's why I know that, because I'm that person. And so the course is designed based on my success, not on like, this is some random person that, I've never had any experience. Like I have my own land investing and land flipping business. And so that's who I find. If you're not that person, it's not that you can't succeed in land investing. It's just that the bent of that person really, I would say would help you succeed. And you can invest in those skills, and the course will teach you how to become a better salesperson, an operational person, and in general. But those are some skill sets that I find would be really advantageous to have.
Yeah, beautiful. And just to read between the lines, I think that one advantage of this course is that you are actually providing a lot of hands-on help to people, which is something you don't often see. A lot of times you're getting coached by a coach that may not have experience, or maybe their experience was from years ago. But I guess what I'm saying, ladies and gentlemen, it sounds like this is a great opportunity to get it on the ground floor.
That's right. And so at the beginning, I mean, again, we're doing this in June of 2024. And as you and I were talking before the show, as someone who is constantly learning and growing, as we should be, things change, right? The platform in the structure of the course, it will always be application based. It will never be a factory. That's not the vision for what I want it to be. But in terms of the type of the structure of it, we'll always have the weekly calls, right? We'll always be investing that way, but who knows where it's going to be. But at this point, I would say that it's going to be the highest amount of hands-on hands touching with me, especially at the beginning, summer, fall 24. It's going to be a lot of you and I on the call and helping you succeed.
Love it. No time like the present. Well, hey, I want to wrap from the first section. We had a great time talking about why land, talking about the barriers to entry, which I think mainly just informational. People are not looking in certain great places. a lot of opportunity to talk about, some of the ways in which a lot of these myths have really, I think, held people back from getting into the land business. But hey, I want you all to stick with me. We're going to do a second segment. We're going to talk about the importance of marketing, discipline and mindset, finding deals, money, building processes. All right. So anyway, so stick with us. But before we wrap from the first segment, I want to make sure everybody has a great opportunity to reach out to you. What's the best way to reach out to Clay Hepler?
Yeah, so social media, I'm very, very open in social. Instagram, Clay Hepler, the Twitter, Clay Hepler, and then my website, land-man.io, and then LinkedIn, it's also Clay Hepler. Clay Hepler, the
All right, do it.
landman.
Yeah, definitely reach out. Gotta say, I don't always recommend people social on the show, but definitely a lot of genuine value out there. So definitely do that. I want to thank you for taking your time to share your knowledge and experience with the audience, Clay. Thank you.
Of course.